Good morning, children. This is our fourth lecture of chapter 6, that is retirement or death of a partner. Here is the request again that you should watch this video carefully till end for complete understanding. And I would like to give you several important instructions that before you study this lecture, that is fourth lecture, you should study previous lectures properly and you should keep your textbook with you and also a writing book while you watch this video lecture. And we are going to continue the same illustration, which is illustration 13 that we have been doing from past two lectures. This is the long sum that we have started and we are doing it extremely slowly. Firstly, because this is a video lecture and also this is the very first long sum of chapter 6 that we have started. So you should make sure that you are done with the sum that we have completed so far. That means you should have prepared the format of journal, necessary ledger accounts, and in the last lecture we have understood all the adjustments. I have explained all the adjustments. Overall there are 6 adjustments given in your textbook if you will see on page number 228. Adjustments till adjustment number 5, till 5th adjustment we have done, and if we are talking about the 6th adjustment, they have only presented the new ratio of partners, and that we have already considered while calculating gaining ratio. Yes, so we'll continue the sum ahead. If you remember all the steps, which is the next step that we are going to follow? It is about accumulated reserves and profit and loss. It is illustration 13 that we are going to continue. It is given on page number 227 of your textbook. Further followed by page number 228, 229. You have journal entries over there. And ahead, page number 230, you have necessary ledger accounts and lastly the balance sheet. I repeat, you should have your textbook with you while you study this lecture. Alright? Okay, so far we have completed adjustments and the very next step, it is accumulated reserves and profit losses. Yeah, so for this, first of all, the balance sheet given to you in your question, page number 227, on liabilities side, if you will see, it is capital accounts first of all, and we have already written this in partners capital accounts as opening balance. Below that, if you will see, there is general reserve. The amount of general reserve given is 40,000 rupees. Okay? Now the amount of general reserve is to be distributed among all the partners in their old profit loss sharing ratio. What is the amount of general reserve? It is 40,000. So the journal entry for this is general reserve account debit 40,000 to X capital account, to Y's capital account and to Z's capital account. 40,000 has been distributed in old ratio, which is 3:3:2. It is mentioned in the question. Okay, so this is the journal entry. You can also see this journal entry in your textbook on page number 228. Alright, and one more thing that I would like to clarify here is that you can easily change the order of journal entries. Some of you might get confused that yesterday we have learned all the journal entries about adjustments. So it's fine if you are writing journal entries related to adjustments first and then you are writing this journal entries about accumulated reserves and profit loss, then it's completely fine. We are doing some as per the order or as per the steps that I have mentioned in the previous lectures. Okay, so if you change the order of journal entries, there is no worry. Now let us talk about the posting of this journal entry. Obviously, you are going to post it in partners' capital accounts. Partners' capital accounts is given on page number 230 of your textbook. In that account, you can see on credit side, I repeat, in partners' capital accounts, credit side, it is given by general reserve account with respective amount in the column of X, Y and Z. Alright? Fine. Then you have again in your question the balance sheet which is presented in the question. Come back to that. Right now we are dealing with the reserves and accumulated profit loss, and we were on liabilities side of balance sheet. We have distributed general reserve. You have another reserve on the same side which is workman compensation reserve. That we are not going to distribute because we have already done an adjustment related to the same. Alright, so let us move on asset side. Over there, you can see advertisement campaign expenditure and profit and loss account. These two are to be written off among partners. If you have studied the concept of accumulated reserves and profit loss in detail as per my instructions, then you should not face any difficulty in understanding this. So this amount is given on asset side. So this is to be written off among partners by debiting partners' capital accounts in old ratio. Okay, let us see the posting for this. Again, in partners' capital accounts, I repeat, in partners' capital accounts, page number 230 of your textbook. On debit side, it is written to advertisement campaign expenditure account with respective amount in the column of X, Y and Z. I hope you remember the rule for posting. You are posting in partners' capital accounts, so you cannot write the name of the partners. Obviously, you are going to post advertisement campaign expenditure account. How do you post this? In journal entry, it has been credited. So while posting it in ledger accounts, you are going to write it on debit side as to advertisement campaign expenditure account. Alright? You should be able to post journal entries by now. We had a chapter ledger posting in standard 11th. If you are not aware of the process of posting still, you should go through that chapter. Otherwise, it is difficult for you to understand the current chapter. Fine. The next thing that we have is profit and loss account. Again, on the debit side of your balance sheet in the question. Again, this is debit balance. So it is to be debited to partners' capital account in their old profit loss sharing ratio. Let us see the posting for this in partners' capital accounts again. Below advertisement campaign expenditure, they have written to profit and loss account with respective amount in the column of X, Y, and Z. Yes, so in partner's capital account, debit side, this is the effect of the journal entry, I mean the process of posting. On which side it is going to get posted? It is written below the journal entry. Alright, let us move ahead. Okay, we have a new concept here, partner's loan. Yes, please come back to your question. In your question, which is given on page number 227 of balance sheet, I mean your balance sheet, old balance sheet, on credit side if you will see, it is written partner's loan. Yes, we are done with capital accounts, general reserve, and now it is about partner's loan. Now first of all, how many partners are there? There are three. It is X, Y, and Z. Yes, Y is the partner going to retire, and Z is going to continue with the firm. Yes, so how to deal with the partner's loan? Let us talk about the loan of Z. The loan of Z is to be written as it is in your new balance sheet. New balance sheet is the one that you are preparing after retirement of the partner. Yes, by that I mean the new balance sheet which is given on page number 231 of your textbook. You can see partner Z's loan 30,000. Why? Because Z is not the person going to get retired. Yes, talking about the loan of Y. Now Y is going to retire. So obviously the amount of loan is to be repaid to Y. Yes, and the journal entry for the repayment of loan of Y is presented here. It is Y's loan account debit to Y's capital account. That means the loan account has been closed and the amount is credited to his capital account. Yes, it is given on page number 230 in your textbook, the same journal entry. Let us see the posting for this. It will be written in partner's capital account on credit side. Yes, you can see in partner's capital account credit side below general reserve it is written by Y's loan account 20,000. Okay, which is our next step. It is record the remaining. Now what do you mean by record the remaining? Let us quickly revise. You draw necessary accounts first of all, and in this particular illustration they have not prepared cash and bank account because there are no related adjustments to bank and cash. In such cases you can skip preparing that account, and if you have already prepared, let it be as it is. You can simply total the account and transfer it in the balance sheet, the closing balance. Alright? Then the next step was you will record the opening balances, then you will solve all the adjustments and the process of posting. Then you will record all the accumulated reserves and profit and loss. Then you will record the remaining items. Remaining, the one which are remaining to be recorded in the new balance sheet when you compare the old balance sheet. Yes? So let us quickly check. Again back to your question. Page number 227. We were dealing with the loan, and below that you have creditors. There was no adjustment related to creditors in your sum. So you will be writing the amount of creditors as it is in the new balance sheet. I hope you understand the difference between old balance sheet and new balance sheet. New balance sheet is the one that you are preparing, and always you write down all the new values of assets and liabilities in that particular thing. Yes, and whenever the new value or any adjustment regarding assets or liabilities is not given, you are supposed to write down the value as it is in the old balance sheet. Yes? So creditors 80,000 will be written as it is in new balance sheet. Alright? And lastly, workman compensation reserve. We have already solved this. We have had an adjustment over this, so it is done. Also, I have instructed you that you should put a tick mark over the things which have adjustments. So you will easily get an idea that you are not supposed to record this again. So workman compensation reserve, if you have put a tick mark, there does not arise any question of dealing with this again. Okay, moving towards asset side, you have goodwill, which is done, land and building, machine, everything is done, stock, there was no adjustment related to stock, so it will be written in new balance sheet on asset side as it is, rupees 50,000. Debtors, there was an adjustment and it is done. Bank balance, advertisement campaign expenditure, profit and loss account, everything is complete. Yes? So now you should carefully observe that if there is no item, I mean there should be no such item in an old balance sheet which you have not recorded. So here we are done with the recording of everything. Yes? So what is our next step? It is the step of totaling accounts, the most important and last step. Yes, make sure whenever you total accounts, you should complete the sum before doing this. You should be done with writing journal entries, posting each and every journal entry, record the remaining things, accumulated reserves, profits, adjustments of goodwill. Everything should be completely done. Yes? Now what is the rule of totaling balancing accounts? You know this very well, but let us quickly revise. Total of whichever side is more is to be written on both the sides. Yes, you know this very well. This is the rule that we apply while balancing every ledger account. What is the second step? You will deduct the total of lesser side from the total of higher side. And the amount of difference is either profit or loss. And that result is to be distributed among partners in their old ratio. Yes? So let us check our revaluation account. Yes, this is your revaluation account. You can also see this in your textbook on page number 230. It is clearly presented there. And also you must have prepared the same in your fair book. As I said, while you study this lecture, you should keep your textbook and writing book with you. One more thing I would like to clarify here is, this was the first sum, and that is the reason we are going extremely slow. We'll increase the speed in the next lectures. Yes, so let us talk about revaluation account. We are at the step of totaling this. Revaluation account is given in your textbook on page number 230, and also you have prepared in your fair book. Now the only difference between the account that you have prepared in your fair book and this particular account, the image presented here, has only one difference, which is by partner's capital account, that is loss. Yes? This will be obtained once you total this account. Alright? So for now, pay attention in your fair book. You can keep your textbook with you. That's not an issue. Yes, use your Kelsey. Do as I say. Now it is clearly visible that the total of debit side is more. And you know well, whenever the total of debit side is more, it is considered as a loss. And whenever the total of credit side is more, it is considered to be profit. Yes, please use your Kelsey. On debit side, it is 30,000 plus 2,000 plus 5,000. So the total is 37,000. And if we are talking about the total of credit side, before writing the loss, it is 21,000. So what is the what is the difference between these two? It is 16,000. We followed the steps. See, total of whichever side is more. Here the total of debit side is more, 37,000. And it is clearly visible that it is written on both the sides. Yes, you are supposed to deduct the total of lesser side. Total of lesser side is 21,000. Yes, the amount of difference. The third step. The amount of difference is profit or loss. Here it is loss because the total of debit side was higher. Is higher. So what is the amount of loss? It is 16,000. Yes, so 16,000 loss. Follow the fourth point. Profit or loss? We have loss in this sum. I repeat, we have a loss in the ongoing sum and it is to be distributed among partners in their old ratio. Apply this point here. Credit side you can see by partners capital account, loss. 6,000, 6,000 and 4,000. Alright, so this completes our revaluation account. Now this answer is to be transferred in partners capital accounts. Before that, we have a journal entry about the loss of revaluation account. This is also given in your textbook on page number 229, the 8th journal entry. And always remember, you are going to write this journal entry only if you are asked to do so. If they have mentioned below the question that you are supposed to write down the journal entries for this sum, only then you are going to write down this journal entry. This is the first sum, so for a better understanding, we have been writing all the journal entries. Okay? So this is the journal entry for loss on revaluation. This journal entry is clearly given in the concept of revaluation of assets and liabilities. I have asked you several times that you study those journal entries thoroughly for a better understanding of this sum. And if you are not doing this thing, then it is difficult for you to understand this sum. So here is the request that you should follow all the instructions given to you in each and every lecture. Alright, you know very well the subject is linked. Yeah, as I have been always saying, all the chapters are related to each other. All the concepts are related internally with each other. So you should make efforts and try to follow the instructions. Yes? Fine. Next is partners capital accounts. You have transferred the answer of revaluation account in partners capital accounts. You can see to revaluation account. Firstly, it is advertisement campaign, then profit and loss, then goodwill, Then Y's capital account, it is about goodwill again. It is new goodwill. We have solved all these adjustments and we have also posted this. Again, if you have changed the order of posting, that's completely fine. Okay, if you have written advertisement campaign expenditure after writing goodwill, that's completely fine. Please do not worry. Okay, yeah, let us talk about revaluation account. You can see the answer has been transferred on debit side because it was loss. It is loss, I mean 6,000, 6,000 and 4,000. Alright, and on credit side we have written all the necessary things. Now the new thing appearing in this particular account is on debit side it is to Y's loan account and to balance carried down. Yes, so this amount we are going to obtain when we total this account. Yeah, you already know the process of totaling. The only new thing here is about totaling the column of retiring partner. Yeah, so let us total the column of retiring partner first. Yeah, that is Y, the column of Y. Credit side, it is 1,20,000 plus 15,000 plus 20,000 plus 20,000 again and plus 40,000. So the total is 2,15,000. The total of credit side of the column of Y is higher. So we are going to write it down on both the sides. Yes, and we are going to deduct the amount mentioned on debit side in the column of Y. I request you all, please ignore the sound appearing in background. You already know this is a period of lockdown. So it is natural that there are fewer noises appearing in the background. Please don't lose your concentration and focus here. So we were talking about that the total of column of Y on the credit side is higher compared to the total of debit side. Now the amount of difference. From 2,15,000 you have deducted the respective amount presented on debit side. That is 6,000, 7,500, 15,000 and 6,000 again. Revaluation tak. So now what is the amount of difference? It is 1,80,500. Now this is the amount of difference of the column of Y. Yes? And this particular amount is payable to the retiring partner. Yes, and there are two options available. Yes, sorry for the inconvenience caused. We were talking about the total of the column of retiring partner. So amount of difference is 1,80,500, which is to be paid to the retiring partner. Now there are two options for the payment as we have understood this in first lecture. There was an overview about it, the detailed explanation of which is left. But for understanding right now, let me make it clear that there are two options, that this amount will be paid in cash to the retiring partner or it will be kept as a loan. Now the question arises that when is the amount to be paid in cash and when is the amount to be kept as loan. In your given question, if you are not instructed clearly anywhere in the entire question that what is the amount to be paid in cash, or if they have not instructed that the amount is to be paid in cash to the retiring partner, at that time you have to always keep it as a loan. Yes, so here you can see in partner's capital accounts on debit side it is 1,80,500. This is to be kept as a loan. It is written over there to Y's loan account 1,80,500 and this is to be transferred in your new balance sheet. You can see this on credit side. Alright. Now talking about the total of remaining two partners. So it is not new, it is just similar to the total of partners' capital accounts that we used to do in chapter 5. Alright, you can see the closing balance of capital 1,60,500 and 47,000. This is the closing capital of remaining partners, that is X and Z, and they are going to continue the firm. It is transferred in the balance sheet. You can see on liabilities side, and also on debit side it is written bank balance 30,000. Yes, you know very well how to total cash and bank account, and that answer has been transferred in balance sheet again, and at last your balance sheet should tally. This completes our sum. Please practice this sum carefully, and if you have any doubts, please let me know. And this is your homework for today. I'll see you all in the next lecture. Till then, stay home.